Hello everyone. In this video, we'll learn some technical and some not so technical things about black money. So black money in very short is income on which tax is evaded. It involves misrepresented transactions carried out in cash, avoiding banking channels. So there could be two kind of things. One is that you earn income but you do not disclose it and hence you evade tax. That could be one. So the income per se is legal but you do not pay tax, hence it becomes black money. Secondly, it could be completely illegal income which obviously you cannot declare in banking channels, on which obviously also tax is evaded. For instance, income from corruption or income from illegal activities like drugs trafficking or any other activity which is in itself illegal. So both these things generate black money. Now another related concept is money laundering. Money laundering is the process of concealing the source of illegally gotten money. So money laundering, what does laundering do? If you launder your clothes, the dirt and basically the blackness of the clothes go and you get fresh new clothes, like clean clothes. So this is exactly what you're doing to the money. So you take black money and somehow you reintroduce into the economy so that it becomes normal legal white money. This is what money laundering in simple terms is. So it impacts the nation's economy as funds move rapidly across borders to obscure the audit trail. So you don't know where it's coming from, what is happening. So it's a very complex web of financial transactions which are used for money laundering. Now this is the basic schematic of how money is laundered. First of all, the first step is placement. So you separate the money from the source and place it in the financial system. So let us assume you have for instance, let us take the example of corruption. So somebody has corruption money. So what does he do? He separates the money, he gives that money to people and they make small deposits in bank accounts and again place it in the financial system. So the money is now in the bank accounts, but because they were made in very small deposits, it is not very noticeable in the eyes of the tax authorities or the authorities in general. Then we have layering. You create layers to disguise the origin and obscure the audit trails. So you rapidly move funds across different accounts. So initially, let us say it was introduced in the account of Mr. Rajesh, then it goes into Miss Sita, Mr. Ram, Mr. Bharat, etc. so on and so forth. That finally, and also they move across domestic borders, international borders. So finally, it's very, very difficult to trace it back to from where it came. There could be buying and selling in between. So it's very complex web of transactions to separate the source and where it finally lands up. So you have layers introduced. Then you have integration. Integration is now eventually this money belonged to this person who had gotten it by some illegal means, corruption or whatever, drug trafficking, whatever. He needs to get his money back. So then he creates front companies. What does that mean? He might open a chain of restaurants or open a restaurant, or he might open some small companies. And so now these companies will do false invoicing. So they will show that they are selling some product and these people, the ones who now have the money in their bank account, these Bharat and Ram and Sita that I said. So these people will be buying the imaginary products from these front companies and will be paying this money to them. So now because there are many front companies, they may be their income might not even be taxable. They could be below the taxation limit or they could be of a very lower income slab, and hence when this money gets integrated with the original owner, then they may not even need to pay taxes and they get white money after all this whole system of money laundering. So this is like briefly and very simply what how money laundering is done. Obviously in this you can introduce many variations and you can make it more and more complex, which is why the enforcement authorities find it difficult to actually trace money laundered money. Okay, this shows the 5 Asian countries with the largest total illegal capital flight during 2000 and 2008. So in this you can see that China is at number 1, followed by Malaysia, Philippines, Indonesia and then India. Okay, what are the options to bring back black money stashed abroad? First of all is tax amnesty. So the income tax can provide for a recovery of tax and penalty of only up to past 6 years, or any kind of tax amnesty scheme which says that whatever money you have you declare and we will take a, let us say, a block amount of 10% tax on that. or we will impose tax and penalty of only the past 6 years. We will, because even if you probably got that money 10 years ago, and you still have had it, like you would have accumulated it, but instead of imposing the tax of 10 years, we will impose a tax of 6 years, or there could be a particular scheme depending on what the government wants. But a tax amnesty scheme can come. They have come in the past also. There are obviously positives and negatives to it. One obvious negative is that once these kind of schemes start coming, it is actually giving an incentive to people to create black money and to cheat, because they will always feel that later there will be a tax amnesty scheme wherein they will be able to go scot-free and declare all their black money, and hence they will they do not have any incentive of paying the taxes and behaving in a proper manner. That is a problem with tax amnesty. The other side, the positive obviously, is that a lot of money gets declared when these tax amnesty schemes come, because obviously people want to declare their money to get rid of the illegality associated with it, and by paying a small tax or a penalty, it is a very good option to get there all the black money, all the these kind of shady earnings into the proper system and channels. Then you have tax information exchange agreements. India has 16 TIEAs and 37 double taxation avoidance agreements. This was done. This number could change, but the number is not that important. Each of these agreements has a specific clause, so they are country specific. Like in Switzerland, our agreement says that we have to give them a specific name of an individual if you want any information from the Swiss authorities, banking authorities, about that particular individual's transactions or bank accounts. So basically this means that whenever we do one of these TIEAs with any country, we can get information on the taxation aspect on people who are either Indian nationals who have accounts in those countries or other assets in those countries. So we can have more and more TIEAs and more TIEAs with provisions which are in our favor, so that we can trace our money stashed abroad. Then we have something called PMLA, which is Prevention of Money Laundering Act, but tax evasion is not included as a predicate offence. So the point is that we need to strengthen the provisions of this act so that all the gamut of economic activities which constitute an offence are properly covered, and they can be used effectively to target people who are getting involved in these kind of activities. Then there's another option of prosecuting conduits. What does this mean? Conduit in simple terms means a vehicle. So this means that whenever you are converting black money into legal money, obviously you will need certain channels or vehicles, like they could be banks. So various banks would have to have some complicity or at least carelessness for them to miss something like money laundering. So like in the example when I was telling you about black money, the money laundering, the process, I said the first was placement, wherein small bank deposits were made in accounts of various people. Now it's the bank's duty to see where the person is getting that money from, or if they are ignoring this, then they could be prosecuted for being an accomplice in the money laundering. So US did this, has been pretty instrumental in doing something like this. They prosecute banks if they have helped in tax avoidance. So this way, when the banks have when the responsibility is fixed on the banks, it becomes difficult for the banks to actually help people in directly or indirectly in generating black money. So this is another way of dealing with black money. Another thing is, we can have a very strong financial investigation system. We should have. Right now what happens is that all our systems are in silos. Even if income tax is a sophisticated system, it is not linked with other things. So it is not linked with the indirect tax. It is not linked with their own assets and property tax. So if we have a complex system which can include the transactions of an individual or related entities across a gamut of activities, then we can see the lending, the borrowing patterns, and from where all the taxes are being paid or not paid. Is there a mismatch between assets and income? So if we can analyze all of this, we will be able to trace we will be able to trace a lot of people with potential black money providers or potential black money generators, and we can then prosecute them. Although there are obvious difficulties in this. First of all, this kind of a system will be in itself very complex and difficult to make. Secondly, another issue of this could be privacy. So there are privacy concerns saying that if the government is sort of snooping in and trying to see all the transactions of an individual, then the individual does not have a lot of privacy. Although I would leave it to you to decide whether this is a valid argument or not, or whether the government has the right to monitor the transactions, financial or otherwise, of its individuals or not. So basically this was a roundup of black money, a very brief one. Thank you for watching. Hope you liked the video. Comments and suggestions are welcome. Thank you.